what is the most interesting number kind of getting beneath the surface on the CPI, you think, and the one that has investors here most excited?
So obviously the core number came in a low side 0.2, and I think when you look in some of the details there, it was a pretty broad-based slowing. So when you look at measures that strip out some of the more volatile components, those also were near 2-year lows, let's say. So overall, it wasn't dominated by one single factor like used vehicles or some kind of quirky factor like that. So I think that's probably something that is giving encouragement to people as they look at the inflation outlook. Bear in mind, of course, it's one report, but it definitely is a move in the right direction.
Rick, what's got your eye on the bond market's reaction?
Well, I totally agree with that assessment that 0.2 was the lowest since February 21, but what really caught my eye was the year-over-years. And if you look at the headline year-over-year at 3%, that's down 67% from its high water mark, which was 9.1% in June of 22. 12 consecutive months, it had its moved lower, down 67%. Now, if you look at year-over-year core, a bit of a different scenario. It's down 27%. 6.6 was its high water mark in September. So we have 9 months there, and it's been down 8 of 9 months. And I understand that that is the sticky part that is going to be the linchpin with respect to what the Fed may or may not do with rates. But ultimately, they keep coming down, and I think that the central bank should be very cognizant of the fact that if they wait 1 year and look at the inflation rates against an aggressive move by the Fed to keep tightening, I think they will have basically passed up the rate of inflation with their overnight rate.
Mike, it's Kelly here. One of the things that I find interesting is that people are taking today's report as evidence that inflation was always transitory, when in fact the Fed had to sharply hike rates in order to make it so.
Yeah, I mean, transitory would be a very long period now. But one thing I think you can say that, maybe in that defense is that we've achieved already a pretty decent disinflation, the numbers Rick pointed out, without really any pain in terms of unemployment. So I think, yes, it did require a aggressive move here by the Fed, but you have seen, it's still, first couple innings here of the disinflation process, but those innings have been relatively painless. Like Chair Powell, I think transitory is probably a word that probably should, stay locked in the chest, but I do think there are some things here that are consistent with that narrative from a few years ago.